Hello aspirant. I hope all of you are doing fine during this festive season. During this season, keep studying and keep enjoying the festivity. In this video, I will discuss about the monetary policy. My name is Devendra Saini. I am discussing the economics topic here. Monetary policy is very important for your examination, even it's the prelims exam or even it's the mains exam. In the prelims examination, every year you will find out 2 or 3 questions related to monetary policy. Even we are talking about the year 2023, 2022, 2021 or 2020. Every year you will find the question in the prelims paper. These questions can be asked directly or maybe indirectly will link to some of the other topics. In the direct question, they can ask about the monetary policy. They can ask about the RBI action related to the monetary policy, and they can also ask about the impact of monetary policy on inflation, the impact of monetary policy on the repo rate, reverse repo rate. So they can also ask related to the employment and the monetary policy. So this become very important topic for your prelims examination. Even in the mains examination, you can find out the question on the basis of monetary policy in the mains examination. Economics contribute almost 8 to 9 questions in the GS3. So out of those 8 to 9 questions, you can find a single question related to monetary policy in the one form or the another form. So this topic is become very important, and monetary policy is become the basis of understand the economy as well. To understand when the Federal Reserve of USA is increasing the interest rate, what is the impact on the Indian economy, and how the monetary policy is tackling that impact, and how what action is taken by the RBI. तो ये सब सारी चीजें आपको monetary policy से ही पता लगती हैं. So we need to understand exactly what is the monetary policy. As an aspirant, you people are reading newspaper on the daily basis. You keep listening. There is an increase in the EMI rate due to the RBI action. Inflation अब 9% से ज्यादा हो गया है. अनएम्प्लॉयमेंट रेट पिछले 15 साल से ज्यादा है इंडिया में. रेपो रेट के इंक्रीज होने की वजह से देयर इज इंक्रीज इन द ईएमआई. सो डिफरेंट काइंड ऑफ थिंग, इन्फ्लेशन है, ईएमआई है, अनएम्प्लॉयमेंट बढ़ गया है, एंड लाइक द रेपो रेट इंक्रीज हुआ है, तो फिक्स्ड डिपॉजिट रेट्स बैंकिंग ने कम कर दिया है. हाउ ऑल दीज आर ऑपरेट इन एन इकोनॉमी एंड हु इज ऑपरेटिंग ऑल दीज थिंग्स? There should be a policy for it, na? So that policy which controlling all this impact in an economy is known as a monetary policy. And monetary policy of any country is specifically controlled by its central bank. In case of India, the central bank is the Reserve Bank of India. So if I define monetary policy in a single line, Central Bank of India means the Reserve Bank of India manage the demand and supply of money in the market to control economic growth, to give stability of the growth, to control the inflation in an economy is known as the monetary policy. So I hope this is clear exactly what is the monetary policy. In the monetary policy, the first 4 word MONE is telling us about the money, means we need to control the demand and the supply of money in the market. And this control, these steps can be taken by RBI at any time. जब वो RBI देखते हैं कि inflation is increasing above 6%, 7%, 8%. The price of commodity is regularly increasing. The unemployment rate in the country is increasing continuously, and the GDP of the country is very less, or there like a trend is very going in the negative side. Deflation बढ़ रहा है, stagflation हो गया है, shrinkflation हो गया है. In that case, the RBI taking the steps. That step is known as the monetary policy. And what RBI is doing in this monetary policy? In monetary policy, RBI is just maintaining the demand and the supply of money in the market. And through the management of demand and supply in the market, all factors are controlled by the RBI through this management. So now we need to understand what is the objective of monetary policy here. Then this is the very important for your prelims examination. Objective of the monetary policy, and many of the question already has been asked by the UPSC in the previous year related to the objective. So I am talking again and again about the economic growth, economic stability. So let's see how the monetary policy impacting the economic growth, and how the monetary policy managing the economic growth. Consider there is a situation when the interest rate is very high. Banking are lending the money at the high interest rate. Consumers are not getting loan from the bank, and the unemployment rate is very high in the country. In that situation, the economy is not overall performing well. So to control the economy so that the growth can be increased, what RBI will do? RBI will increase the supply of money in the market. When RBI will increase the supply of money in the market, that will lead to increase the money supply within the banking system, within the customer, within the hand of the each citizen of the country. If there is an increase in the money supply in the market, there is an increase in the disbursement of the loans from the banking system. That disbursement will increase the supply of the products in the market, and if the increase in the supply of the product in the market, that lead to decrease in the price, or I can say that will lead to the stability in the country in that specific situation. So how the monetary policy, a single action by the RBI, help in maintaining the economic stability in a country? Now let's discuss the second aspect of it. When economy is not performing very well, there is very less interest rate, and businessmen and the consumer are not happy with the current situation of the economy. Inflation is very less and the GDP is not growing overall, and the situation of deflation, the situation like the deflation is there. So in that context, what RBI will do? RBI either increase or either decrease the money supply. So that's the situation RBI is looking at. In which situation RBI will use or increase the money supply, and in which situation RBI will decrease the money supply. The second context where RBI uses monetary policy to control the inflation. After COVID, we look the inflation prices going higher, 10%. 9%, 8%. Prices of oil is increasing day by day. Prices of the LPG, prices of vegetables. So they all include toward overall increase in the inflation in the country. If the inflation in the country is growing, then the local citizens are not able to buy the goods because they have a limited money in their hands. In that situation, RBI will take out the money from the market so that it can maintain the stability. So it will decrease the supply of money from the market. So that decrease in the money supply from the market will help RBI to control the inflation. And there is a committee, specifically committee for controlling the inflation in the country, is known as the Monetary Policy Committee, which is headed by the Reserve Bank of India governor. And in 2017, there was a question related to the committee directly in the paper. The question was, this committee is headed by, how many members are in this committee? Currently there are 6 members, 3 from the RBI and 3 from the governments. But the statements was given there, they are saying there are 12 members in the committee. So a very straightforward question was asked by the UPSC. That's also linked to the monetary policy. In the third state, how the monetary policy is helping to controlling the unemployment in the country. Now let's see the third angle here. The first angle we see the stability of the economy. The second angle we look at the inflation in the economy. The third angle we are looking at the unemployment, to tackle the unemployment in the economy. In the last 4-5 years, we are looking at India has the highest unemployment rate. So there must be some action taken by the Central Bank of India, means the Reserve Bank. So what Reserve Bank will do? Employment को बढ़ाने के लिए क्या करेंगे Reserve Bank? So in that case, Reserve Bank will increase the supply of money in the market. That the supply of money increase in the market will lead to generate more employment. How? The question mark is how the increase in money supply will lead to increase in the employment in the market. When RBI is decreasing the interest rate, it will lead to increase in the money supply. That money supply, the bank will lend to those who are the employers, to the industrialist, to the MSME. They will increase the manufacturing. That will increase the demand. If there is an increase in the more demand, so the labor market require more people. That more people will be absorbed into the market, and that will lead to decrease in the unemployment in the country. So these are the different angle of the monetary policy where the RBI controlling all the things through the action of the monetary policy. But these action will be of the different kinds. It can be maybe due to change in the repo rate, maybe due to change in the reverse repo rate. That can be the change in the statutory liquidity ratio. That can be due to the change in the cash reserve ratio. That may be change in the bank rate, that can be the moral suasion, that can be the open market operation. All these terms confusing you. In the next upcoming video, I am going to discuss all these terms. Before ending this video, there are 2 types of the monetary policy the RBI is following. The first is the expansionary monetary policy. The second policy is the contractionary monetary policy. In expansionary monetary policy, the RBI has a target to increase the money supply in the market. To increase the money supply in the market, RBI always decrease the interest rate, means always decrease the repo rate. So when there is a decrease in the repo rates, banks are getting the money at the lower rate, so they will lend the money in the market at the lower rate. So that will lead to increase in the money supply in the market. And second is the contractionary monetary policy. Contractionary monetary policy is the reverse of the expansionary monetary policy. In the contractionary monetary policy, RBI has a target to decrease the money supply in the market. So, in this case, RBI will increase the interest rate. It can increase the CRR, it can increase the repo rate, it can increase the price or reverse repo rate. So, it can take any of the action to decrease the money supply in the market, and that will lead to control the money supply in the market, and that is known as the contractionary monetary policy. So this is a basic about the monetary policy. In our upcoming video, I am going to discuss how the Federal Reserve rate change impact the Indian rate, and how RBI is controlling, and how the RBI is taking a different kind of action. What is open market operation? What is different kind of the open market operation taken by the RBI? What is the qualitative change? What is the quantitative change? We are going to discuss in the next video, so stay tuned. If you are having any doubt regarding the monetary policy, you can mention that into the comment section below, and I will suggest please watch the video of all the topics I am covering here. Initially, we covered the topic related to GDP, we covered the topic related to GNP, we covered the topic related to national income. These are very important for your prelims examination, and they're also very important to understand the basics of economy, so you can answer the question in your prelims examination. Thank you everyone.